So since we have, I said, somebody's asking, I said, if you have no experience in trading, no experience whatever, just type in recruit. If you have maybe experience under 6 months, type in sergeant. If you have a year and above, you type in captain. 2 years and above, you type in major. So let me just start off. So want to welcome everybody to this Trading Pros Beginners ICT Training. And as you all know, Trading Pro is about your improvement as a trader. Trading Pro is an international multi-award winning brokerage service firm. And they have their physical presence in Nigeria here at number 2 Allen Towing Roundabout. And in order to help get you up to speed, they are offering this training. Let me make this clear to everybody. This is not a free training. This training has been paid for by Trading Pro. So don't think that this is just a runoff of the mill kind of training where you just come and you're just taught anyhow and you go. No. Trading Pro has paid for this training to the tune of almost $50 per participant. So let's all take cognizance of that and take this training very seriously. If you have any questions, the class is going to end by 11. So if you have any questions, there will be 15 to 30 minutes period for questions. So during the training, I would not entertain questions. So please write down your questions. And my name is Martin. I'll be your trainer. Those are some of you know me as, some of you don't know me as Martin, but those who don't know me, my name is Martin. Some of you know me as Great White. So let me just do a brief introduction. I am a trader. I have close to 10 to 11 years trading experience. I have a BSc in psychology. Apart from several other financial qualifications, I am an ICT chartered student. So what does it mean by being an ICT chartered student? It means that I learned from Michael Hudson himself. That is the founder of ICT. I was in his last private mentoring class for 2001. That's like, yes, 2021. That's 2021, 2020, 2021 class. And that was his last private class. He does not do any private mentoring again. So when I say you're going to be learning from safe hands, you're going to be learning from somebody who learned directly from the source, not somebody who learned from a second party or something like that. I didn't learn this on the internet. I learned it directly from the source. So that aside, if you have any questions, the questions will be answered at the end of the class. So let's begin. So I hope everybody can see my screen clearly. If you can see my screen clearly and hear me, just type in yes.
Yes, it's clear.
Okay, so welcome to okay. Welcome to Trading Pro Nigeria Academy. Please keep your mics on mute. Please keep your mics on mute. So, welcome to Trading Pro Nigeria Academy, Smart Money Concept, SMT, and Inner Circle Trader, training from basic to advanced class. So we're going to start off with the complete Inner Circle Trading, that's ICT Training, is a thorough educational program for Forex traders. It is created to give participants in-depth knowledge and the abilities to support them in making successful trades in the financial market. So these are the major items you need to understand in the ICT trading concept. Once you get this, every other thing is going to take shape. So the elements of a trade setup, framework surrounding the idea. You have consolidation, 1. 2 is expansion. 3 is retracement. 4 is reversal. Now, these are the 4 elements, the framework that constitutes the market. Now, the reference points in this framework is what is referred to as reference points in institutional order flow. What we have order blocks, fair value gaps and liquidity voids, liquidity pools and stop runs, and then we have equilibrium. So this is how price is delivered. Price is always delivered first from a consolidation. From a consolidation, it will move to an expansion. From an expansion, it will move to a retracement. From a retracement, it will move to a reversal. Price does not move from retracement to reversal or from reversal to expansion. No. It always starts from consolidation, expansion, retracement, and reversal. Once you understand how price is delivered like this, a lot is going to get very clear to you. So price delivery, what is expansion? Expansion is when price moves quickly from a level of equilibrium. When price leaves a level quickly, this indicates a willingness on the part of the market makers to reveal their intended repricing model. What to look for in price? The order block the market makers leave at or near the equilibrium. So let me go to a chart so that I can basically show you several examples. It's better when you're looking at it at a chart. So this is a consolidation. This is an expansion. And like we know, what do we look for? The order block that the market leaves at or near the equilibrium. So most often, before you have an expansion, you're going to have a down candle. Because due to the volume that the market makers move, they don't buy on bullish candles, and neither do they sell on bearish candles. They do the opposite. They buy into down close candles and sell into up close candles. Are we on the same page? Are we on the same page?
Yes, sir.
So once you understand that, after the expansion, you're going to have the down close candle is what you call an order block. What do you want me to repeat? What did you say I should repeat? Somebody is asking, please repeat that. You can unmute yourself and ask your question now. Let's make sure your background is not noisy.
Okay, sir, you mentioned that before an expansion occurs, there will be a down candle, right?
No. Wait, understand this. You are going to first have the consolidation, then the expansion. That expansion, you're going to most times have a down close candle. That is what they buy into that creates the expansion. So now, after the expansion, just wait, we are still getting there. So when you have the expansion, what are you watching? You're waiting for price to come back to this last down candle. Now, let me show you an example now. This is an example that is just happening now in price. We have this set of down candles and we have what looks like an expansion, true or false?
True.
Now, let's note what has happened now. This last down candle, do you see the way price has come in there? And do you see why price is moving away from there? Is it making sense? So this is an expansion. The expansions, they have different sizes depending on where price is moving away from. Each time frame has its own structure point. So if price is reacting from a higher time frame, like we're looking at the 1 hour time frame now, if price is reacting from a higher time frame level, you're going to see a big movement. If price is moving away from a higher time frame level, you're going to see a very high expansion. But if it's from a 1 hour time frame, it might not be that big. So you can see we have an expansion here and we see price has moved back in and there's a little action here. So let's continue. So what do you look for in price? The order block the market makers leave at or near the equilibrium. That's what we have here. And what is the equilibrium? The equilibrium is the midpoint of the consolidation. So you're going to look for the low, that's the low made within that consolidation, and the high that was broken out. Most times, price, depending on the pair, that's one thing you need to factor in again. The more volatile the pair, the further it will move. It might not respect the equilibrium. It might go below the equilibrium. But if it is not a volatile pair, it would respect the equilibrium. So that's what we need to have at the back of our mind. Most times, price will come back to the equilibrium. Sometimes it might not come down to the equilibrium. So do I have any questions so far on what I've explained?
I don't think.
Okay. Okay, so the next part we're going to look at is elements of a trade setup, retracement. So after the expansion, most times you're going to have a retracement. And that retracement, where does it seek? It seeks liquidity gaps and voids, also known as fair value gaps. Everybody uses the term fair value gaps, but fair value gaps is the collective name for the different types of imbalances. There's what they call a BC, which is BISI, buy side, sell side imbalance, and what you call a CB, which is what is called sell side, buy side imbalance. So I will explain that as we move on. So when you're looking at a retracement, what is a retracement? A retracement is when price moves back inside the recently created price range. When price returns inside a recent price range, this indicates a willingness on the part of levels not efficiently traded for fair value gap, for fair value. what do we look for in price? The fair value gaps and liquidity voids. So if we look at this massive down move, if you notice, you only have down candles. Because the way the algorithm works, it works on balancing. For every down move, you must have a sell side to balance it. So when you have a one-sided move, this is what you call a BC, buy side, sell side imbalance. That means there was only movement in one direction. Most often, price will try to rebalance that gap. And in the process of rebalancing it, it's going to provide what you call fair value. For those who missed this move, this will be an opportunity for them to take part in the trend, whether it is a sell side or a buy side. In this case, we have a sell side. That means there's only delivery to the sell side, which means we have buy side imbalance. So this is what you call a CB, sell side imbalance, sell side, buy side imbalance. So the next part, let me see if I can get this on the chart. So let me see. Like this is an example here. We have this consolidation. We have this break to the downside. And what the price do? Price retraced almost back into the recently created range. And after doing that, what happened? Price went back to the downside. Remember, during the retracement, you have the fair value gap. So let me show you what a fair value gap is, or a sell side imbalance. Now, you have this candle. It's normally a 3-candle pattern. If you look at this, there is a gap between this low and this high here. So this is where price was delivered only to the sell side. There was no buy side. There's no buy side candle. Do you see any up close candle within this place? No. So most often, what does price do? Price moves back into that area to rebalance it. So this is what you call a bearish fair value gap, as those who call it. Because it is believed that when price comes in here and fills it, there's a potential for it to continue in the downside direction. So this is what you call a bearish fair value gap. Let me find a bullish fair value gap.
Yeah, they talk trash. They talk terminology. Make we read.
So please and please, if you don't feel the training will be beneficial to you, please quietly leave the class. There's no need to be insultive, because if you're insultive, I would remove you from the class. So this is what you call.
Please, you need to mute everybody.
Okay, I'm going to do that.
Mute everybody. Whatever somebody or anybody wants to say, let them type until after the training.
Okay, I've done that. So we have, this is what you call a bullish fair value gap. And if you notice, this is a small consolidation here. Now this is the expansion. And you notice what happened when price came in here. Price came down to this fair value gap. And what happened? There was a movement to the upside. You also have another one here. And if you notice the way price held, and after that, what happened? There was a move to the upside. So this is what a fair value gap is, whether bullish or bearish. It's a 3-candle pattern. You have the first candle, the second candle, and the third candle. Once there is a gap between the low and the high of a candle that transverses between them, you have what you call an imbalance. That means that price was delivered only to one side. Somebody is raising the hand. Do you want to ask a question, Mr. Michael Akinsinde? You can type in your questions. If you have a question, you can just type in your question. Type in your question and I'll get back to it. So this is what a fair value gap is. So let's continue. So this is what a retracement is. You find fair value gaps in all time frames. It's not peculiar to any time frame. But the higher the time frame, the more powerful the fair value gap is going to be. So if you're looking at the fair value gap on the daily time, on the 4 hour and above, it's more powerful. A 4 hour time frame fair value gap has more power than a 1 hour fair value gap. A 1 hour fair value gap is more powerful than a 15-minute fair value gap. A 15-minute fair value gap is more powerful than a 5-minute fair value gap. So that's the hierarchy. So it's top to bottom, not bottom to top, top to bottom. So the next part we're going to look at is the reversal. So what is a reversal? Reversal is when price moves the opposite direction than the correct direction it has taken. When price reverses in the opposite direction, indicates the market makers have run a level of stops and a significant move should unfold in the opposite direction. What do we look for in price? The liquidity pools just above an old price high or just below an old price low. So we have a significant high. You see the way price went above it and immediately went low. We have this here and we have this here. So let me get us on a chart explanation. So let's look at this. Let's go to the 4 hour time frame. If we look to the left, we have this high here and we have this high here. Now, what do you mean by liquidity? Liquidity, the market does two things basically. It seeks liquidity and rebalancing. Rebalancing means that it seeks to fill in fair value gaps. So that's what you need to understand. The market does two things. It is either seeking liquidity or it is seeking to rebalance. So if we look at this, and now what serves as the liquidity? There are those they call breakout traders. They are what you call breakout traders. They are people who have buy positions above highs and below lows. So their intention is that once price breaks above an old high, there's going to be increased momentum in the direction of the breakout. And then you have those who place their pending orders below old lows. And once price gets to those lows, most often there's a movement in the opposite direction. That is why most times when you're trying to trade support and resistance, you will find out that you sell a resistance, price will move a little bit against you and maybe take you out. Then you buy a support only for you to see price go below that level and keep going in the opposite direction. So when you have a high like this, so those people that have positions here, those that have buy stops, and those that are selling, they will put their stop losses here. So once price moves That is what price needs as liquidity. So once price takes the whole liquidity here, most often it moves in the opposite direction. You have this support here. Most people are taught when you place a buy, you place the buy at the level and probably 10 pips or 5 pips below the level. What does price do most often? Price comes there, sweeps below the level, hits your stop loss, and continues in the opposite direction. And then somebody might say, what happened? The same thing with the highs. There are various trading strategies based around highs and lows. So we need to be aware of that. So that's what a reversal is. So the next part is a consolidation. What is a consolidation? Consolidation is when price moves inside a clear trading range and shows no willingness to move significantly higher or lower. When price consolidates, it indicates the market makers are allowing others to build on both sides of the market. Expect a new expansion near term. What do we look for in price? The impulsive swing in price away from equilibrium price the impulsive swing in price away from equilibrium price level of that is found exactly in the halfway point of the consolidation range. So let's go to the chart and see if we can find examples of a consolidation. So now a consolidation, like I said, is when price has a significant high and a significant low and is not trying to break out of that range. You can have consolidations on different time frames. You can have a 15-minute consolidation. You can have a 1-hour consolidation. You can have a 4-hour consolidation, and you can have a daily consolidation. Like if we look at this here, we have this significant high, and we have this significant low here. Let me use something shorter so it doesn't have to be longer. We have this here, and we have this here. So if you notice, price was just within this range. You can see it. And then there was the expansion. Just like I said, sometimes it will not come back to that equilibrium. You need to factor that in. If there is a fair value gap above the equilibrium, sometimes that fair value gap might be used and price will not come down to the equilibrium. So those are things experience will show to you. Like we have this expansion. Somebody would expect the retracement to come down to this last down close candle. This is the other block, but the price come down there? No. Instead, where the price come into? Price came into the fair value gap here. And you see it, price came into the fair value gap because we have this upper fair value gap and we have also a lower fair value gap. So sometimes you can't tell exactly which price we use. You just need to wait for it. So do you see it? You see price filled up this first one and came down to the second one. And from there, what happened? We can see the expansion. So those are some of the things. So if you notice, most times you don't always have the fair value gap. This is a balanced price movement. Can you see it? There is no gap between this high and this low. It was efficiently balanced. Then if you look at this, this is a tiny one. So sometimes when there is no fair value gap, the price might move to the next one. So let's continue. So the next we're going to move at is market structure. So market structure is the behavior, condition, and current flow of the market. It highlights support and resistance levels, swing highs and swing lows. A structure is simply a consistent direction of price movement over time. Market structure can tell you if the market is trending or not. So now this is where it's going to get very, very interesting. Now, what constitutes a swing high? What I'm going to teach you now, if you understand it, it will change a lot for your trading. So in every price movement, you have a swing high. That is a high and a low. Now, after, because you understand the four elements of the market, first you're going to have the consolidation, then you have the expansion. Now you're going to have the retracement. Now, that retracement, if it moves up to break this high, you have an up move in play. You have a bullish move in play. So if this high comes back down and doesn't break this low and goes back like this, you have what you call a higher high, and you're looking at a bullish play, a bullish move in play. So this is a high. This is a higher high. Now, where do you have a bearish trend? You have a bearish trend when you have a swing high and a swing low. You have a retracement and price breaks this point here. Once price breaks this point and retraces and doesn't take out this high and moves back down, you're going to have a lower low. You're going to have a lower low. And that lower low is the first sign that price is about to move bearish. So you have this low here. That's the first low. Once it is broken by this high, this now becomes a lower low. And as it keeps moving back down, you keep having lower lows and lower highs. So the characteristics of a downtrend is lower lows and lower highs. The characteristics of an uptrend, let me use the text let me write it out as a text. So you have a high. You have a high here. That's here. You have one high. If price makes another high, then this becomes a higher high. And this a higher low. So when you now this for a bullish move, because here will be referred to as a low. This will be referred to as a low. This is a high, this is a low. So the break of the high will give you a higher high. Now the retracement back into this broken range that doesn't take out this low that broke this high. Once price moves away, you're going to have a higher low. And that is significant for a bullish move. Now the reverse is for a bearish move. So in a bearish move, you're going to have a high. and you're going to have a low. Once this high breaks this low, the next high is going to become what you call a lower high. And then you're going to have a lower low. So somebody might say, how do I find this out? On your MT4, one very simple indicator you can use is the zigzag indicator, or you can also use the fractal indicator. But if you're on Trading Pro, if you are using Trading View, because that's what most people use, if you're using Trading View, if you notice, these are my fractals there. But let me put in my zigzag indicator. Somebody's asking, you keep saying when this happens, we'll have a high, and when this happens, we'll have a low. So it is set in under probability. Now let's look at the chart. Because I like using physical examples. I don't like saying things that, okay. Now, using the zigzag. We have a high here, and we have a low here. True or false? This is a high, this is a low. Price didn't close, break above this high. Because when they say a break of a high, the best use is a body close. You need a body close above the high. So if we ignore this high and use this set of highs here, if we use this high, we can say that price closed body-wise above this. And this is the retracement. After the retracement, what do we have? A higher high. Now, there's a retracement back into where the range of this higher low to this higher high. Do you see the retracement? Did price break this high? Yes. Price broke this high. This high was broken by price, and this is low. Now, price broke above it. Where did price come back into? This down close candle here. Do you have a higher high? Yes. Now, because this is a 4-hour time frame, if you're waiting for the break of this low, you're going to miss all this move. And sometimes, if you also look to the left, you will find out where price was on a higher time frame. Let me not go too far. So somebody is asking what are the names of these indicators. So if you're on Trading View, you will look for zigzag. Let me see. So if you're on Trading View, you're going to look for zigzag plus plus. That's the name of the indicator, zigzag plus plus. You remove all this other background. I don't have it. They're all there. So let me just go to the settings. So you see zigzag plus plus LD. My depth is 6, my deviation is 5, and my back step is 3. Every other thing is the setting I used. Then the style, I don't have the directional background. I have the direction. I don't have the labels, and I don't have the lines. Let me put the label so that you see. Can you all see it now? I've put the label. So can you see what I was explaining to you? The break of this lower high constitutes a higher high. This is a lower low. Once this high is broken, this will change to a higher low. You have a higher high. You have a higher low. You have a higher high. You have a higher low. The break of this low creates a lower low. Then lower high, lower low, lower high, lower low, lower high, lower low. This low breaks this high, it becomes a higher high. But the price continued to the upside. No, it took out this low, so we have a lower low. Like that. If it were this simple, everybody will be making money in trading. But between you and I know, it's not this simple. So that's part of my job, to actually break it down and make it easy for you. So for the other this thing, you could just look for Bill Williams fractals on TradingView. You just look for Bill Williams fractals. Let me see if I can type it in. So that Bill Williams fractals is what I have here. You get? So let me just shift this. So what is the fractal? Let me set it to, this is a normal setting. This one I use is weak edge fractals. It shifts, it has 3 or 5 bar. The normal fractal is 5 bar. What do I mean by 5 bar? Let me do a replay. So let's look at this. It forms after 5 candles. So you have, if it's bullish, you're going to have 1, 2, 3, 4, 5. This is a 5 candle fractal swing high. Then a bullish fractal swing low is 1, 2, 3, 4, 5. That's what you have here. So you have 1, 2, 3, 4, 5. Let me just, because my time is almost up, let me just quickly replay so that you guys can see it. That's the advantage of TradingView over most MT4 platforms. You can actually replay and see and backtest, because what you don't backtest, you can't gain confidence in it. So let me move it forward. So let's see. Let's watch when the fractal is going to appear. You know, we have 1, 2. This is the third candle now. Let's go. Okay, we have this swing high. So we have 1, 2, 3, 4. Do you see it? You see this candle? This, it will appear at the close of the 4th candle. So you have 1, 2, 3, 4. At the close of the 4th candle is going to appear. You can use this as an entry system. I've just taught you an entry confirmation now. Now, let me show you the bullish side of it. I've just showed you how to use a confirmatory entry system now. Let me show you the bullish side of it. Where is this thing? So let's look at the bullish side of it. So we have 1, so let's see. So we already have 1, 2. So you have 1, 2, 3. 1, 2, 3, 4. So at the, you know, it's a 5 candle pattern, 2 to the left, 2 to the right. So at the close of this 4th candle, it's going to always appear. At the close of that candle, it's going to always appear. So you can use this as an entry confirmation from any level you're looking at. It will save a lot of heartache. So I think that's where I'm going to be stopping today. So let me have your questions. Let me have your questions. Type in your questions into the group. Let me have your question. So you can unmute yourselves now to ask your questions. You can unmute yourselves to ask any question you have. you can either type in your questions or you can unmute yourself to ask your questions. Hello? Is somebody asking a question? You can type in your question or you can unmute yourself to ask your question. So I'm still waiting for your question. Somebody is asking, can you explain what you mentioned after expansion? So let me go back to the material. Scroll up. So it's what you call price delivery. First, it's always going to start with consolidation. That's when price is ranging, what we refer to as a ranging market. Then you're going to have expansion. After the expansion, you're going to have a retracement. After the retracement, then you can start looking at a reversal. Mr. Patrick, can you understand what I've just said? Mr. Patrick, are you there? Can you hear me? Have I answered your question? So somebody is asking, are the indicators you provided us the main indicators that you use to identify and place trades? Basically, yes, but I also have my experience. Basically, yes, and I also have my experience. Then somebody is asking, I'm new here. What is the best amount to start trading Forex? So depends on your risk tolerance, but I would advise you just start with anything above $100 to be on the safe side. Anything above $100 to be on the safe side. So in the absence of any other question, I'm
Hello,
going to
sir.
do, yes?
My
Don't
question
leave,
is,
don't leave. For those of you that are advanced traders, don't leave. I'm going to do market forecast for New York session. So don't leave. I'm going to do a forecast session. This we do for our clients. This we do for our clients by 10 p.m. every day and 10 a.m. every day. But due to the fact that I'm having this training, it's going to be after the training. So if you're an advanced trader, don't leave, wait for the training because you will ask questions there. It's where you learn better. So don't leave immediately after. Somebody is asking a question. Go ahead with your question.
so my question is for the entry model of the BIB for like when you want to buy a pair for the BIB Boo Boo entry model. Do we enter immediately the fourth candle closes, or you still wait for a retracement
No,
before
once the
entering?
swing, wait. Now let me explain. If you're using a 5 candle fractal, it is 1, 2, 3, 4, 5. When it forms, the fractal is going to appear at the close of the 4th candle. Sometimes, if you're going to use it, you need to look to your left to make sure that it is not closing into another fair value gap. Because if it closes into another fair value gap, it's going to retrace. That's 1. 2, you must be aware that you must know where it is creating that swing from. Is it a 4-hour level or is it a 1-hour level? So those are some, don't worry. As you stay, just watch the review. I'm going to do a review now. I'm going to do a review of the forecast I did over the weekend. And for those of you who haven't joined, I will advise you join our YouTube channel. This is the YouTube channel. So good evening, everybody. This is the review that was done over the weekend.
A question, sir.
Welcome
Good
to
afternoon,
this
sir.
week's Forex. Okay, go ahead with your question.
Okay, sir. My question is, you say price started from consolidation to expansion,
Yes.
then replacement and reversal.
Yes.
So I want to ask, after consolidation expansion, is it must that the price must reverse? Sorry,
No.
the price must retrace
No.
before the price.
No, see, after a consolidation, you're
Yes,
going
sir.
to have an expansion.
Okay, sir.
After that expansion, you're going to have a retracement. Are you with me?
Yeah.
From the
Yes, sir, that's all.
retracement, it may reverse
Okay.
depending
Or
on
it may
what it
continue.
expanded into.
Okay.
You get it may reverse or it may continue. Like now, if you look at this now, we have an impulse move to the downside. True or false? Hello? The person who has a question, are you there? We have an impulse move to the downside. True or false? I can't hear the person again. So the training has ended. I'm going to start my Outlook review. The training will continue tomorrow throughout this week, but I'm about to do a review because normally the company does a review for its trading members. So this is you just go to YouTube, you type tradingpro_NG. That's a YouTube link, tradingpro_NG. I hope everybody can see it. tradingpro_NG. So you type it in. We already have the forecast for the 1st to 5th already posted there. So what I'm going to do now is a recap of what has happened between London and Asia. Hello, can you all still hear me?
Yeah, we're hearing you.
So this training, I'm going to stop the recording so that I can now start the recording for the Outlook, because we are going into the New York session and we normally run analysis for our clients. Okay, let me post the link. Let me post the link in the group so everybody can easily get access to it, because somebody is saying I searched and I found something else. So I've already posted the link to the group, so everybody can just go there, follow it up. It will be good. It will help you with your trading and also give you an edge. So let me stop this recording so that I can start the recording